Do you know the benefits of risk management? In today's podcast, I'm going to give you a high level overview of the benefits of risk management thinking in the context of building business relationships. I'm Justin Hitt from Inside Strategic Relations. One of the things that I do for clients, as well as Fortune 100 corporations, is I look at the laws, rules, and regulations associated with a particular business activity. If the business, for example, collects names, addresses, and phone numbers, or otherwise conducts business and gathers personal information about individual customers, then they're going to have certain policy regulation that they need to follow. If they're doing business in the EU, there's different regulations versus simply doing business only in the United States. So, as a risk management professional, I'm looking at the impact of laws, rules, and regulations that are currently interacting with the organization, as well as what potential changes would do to impact. And we address those laws, rules, and regulations through the use of policy, internal procedures, business processes, and more importantly, controls. Now, control helps to prevent or detect a kind of a variation or violation of a law, rule, or regulation or a stated policy and where the organization would be out of compliance to their stated rules. So, for example, if a company says, yes, we collect name, addresses, and phone numbers of clients, as well as bank information and details about transactions, but we do not share these to an unauthorized party or any third party without these following criteria, we use controls to make sure that internal activities are congruent with the policy established, but also that the policy is in alignment with the actual laws, rules, and regulations pertaining to privacy. So when I work with a private client, we do the same thing. So, for example, if a client owns a foundation and they also own a business, and there's personal assets, there's business operations, there's the foundation itself. uh, if they are a material if they have a material involvement in the foundation, they might be a disqualified individual, so using assets in the foundation to support personal property, for example, could be outside of the charitable distributions of the organization. It could be in violation of what's called insider or self-dealing activity. And so what I may help the client do, for example, is to gather evidence, develop law internal policy, and then ultimately prepare an audit for their CPA or their foundation management company so that the evidence is available to support how the company organizes. Now, in some cases, I may make recommendations, not as a legal professional, but as a compliance professional. So, for example, I might go speak with a lawyer, I might work with a CPA, and a foundation that provides certain services that a executive inside the foundation or a director inside the foundation may benefit from. Let's say, for example, the foundation teaches agricultural work, and they're going to do a land improvement project or teaching on land that is owned by a disqualified individual in the foundation. Uh, I would raise that up as a red flag or a potential issue. And then the structure may change where they, instead of owning the primary title on the property, they would gift that property to the foundation through a charitable remainder trust so that essentially the foundation owns the property while the disqualified individual has the financial responsibility of maintaining the property. Therefore, this activity, this training program that materially improves the property, would now be within the charitable disbursements. Now I giggle a little bit because again, it sounds like I make simple things more complex, but what I'm looking at is the intricate uh, web of laws, rules, and regulations, of the requirements that are set up by a legal team, the expectations that are set up by an audit team, and then as a compliance manager or a control manager, I'm going to make sure that the business process, how the business operates, functions within these constraints. So yes, it sounds a little a little complex. You can do this, but you can't do that. Or you can do this as long as you're not a officer in the organization or the property is titled correctly. Or, for example, when you're doing a marketing campaign, you can collect email addresses as long as you've got permission and the records support the permission that you have to do follow up emails. We put all this stuff into a binder and we make it easy. So your organization may have a complex structure. You might be a business owner, you might be an officer in a foundation, you might provide and receive services through a variety of organizations. You may have a scholarship program and who is eligible to apply for the scholarship. Well, again, that would depend on the relationship of the individuals who are applying for the scholarship, as well as the relationship between directors, officers, employees, and such. Now, it sounds complex, but it's way more complex if you get this wrong because there is inherent risk. And again, this is where the risk management comes in. There's inherent risk everywhere from IRS audits to the Federal Trade Commission to other outside regulatory organizations finding you far more than you can gain from taking shortcuts or otherwise uh, cutting corners in your actual operations. So, my focus is how do we take the complex laws, rules, and regulations? How do we distill them down into a simple set of policies that guide our day to day activities? And then ultimately, how do we develop the processes that keep you on the right side of an audit? Now, what's the right side of an audit? It means to have the highest probability possible that you will pass your audits. Could be an IRS audit, could be an internal audit. It could be the Office of Currency Comptroller or the Comptroller of Currency. It could be the Federal Reserve. It could be um, the hundreds and hundreds of regulatory bodies that are out there today. So we want the highest probability of passing an audit. But the larger your organization is, the more realistic it is to understand that an auditor will find something. So the secondary element, and I really pride myself on this, and my mentors have taught me this, is we have a proactive yet preventative approach, so that if auditors find something, it's either we've self-disclosed it in advance, so you know it's a problem and you've created an issue, and now you have a plan for resolving the problem, or it's something minor that once you get the issue, you can take care of pretty quick. Now, unfortunately, again, corporations make mistakes. Corporations find problems and they try to hide the problem. So, a business manager might find an issue. They may be at risk either through ignorance, maybe they didn't realize a policy was necessary and they're doing work like collecting email addresses and customer information, and they're not properly securing them just simply out of ignorance. Now, a regulator doesn't really care if you're ignorant. And if you don't know what you're supposed to be doing, then you have a high burden of responsibility to figure out what you're doing. And that's why my role is difficult at times, because I have to uh, build relationships with individuals. I have to listen to their problems. There has to be a comfort level of coming to me with a problem. And then I have to tactfully address the problem in a way that supports the goals of the organization, saves face for the individual who raised the problem. You don't want to, slap them with a bunch of extra paperwork because they raised the problem. You need to make them look like heroes so that they have the support from their managers to solve these problems. And then ultimately, we need to design business processes and controls so that you don't have the problems in the first place. It gets extremely expensive. So what I do as a risk management professional, and I might have a control officer title, I might have a control specialist or control consultant title, I might have a business process or third party risk manager. The title isn't as important as the activity. And again, my job is to understand the complex web of laws, rules, and regulations, to understand the relationships between policies, processes, risks. We didn't even have a time to go over like a risk register. Taking the laws, rules, and regs, extracting the potential risks, identifying whether or not they're relevant, defining major controls for large projects. All of these things come together to reduce risk of an organization. Now, remember, we're not going to be able to eliminate risk. So I have to be realistic about there's 99 problems, and we're going to control for every one of them. But some of these things we're going to control by accepting the risk and then framing the supporting documentation about why we accepted the risk, what's the potential loss, and then of course we're going to reevaluate that with what's called an RCSA, which is a risk and control self-assessment that is usually an annual program that is again going to go through the risk register. It's going to go through changes of applicable law. It's going to go through the policies. It's going to go through the business processes. It's going to go through the controls. Now, I'm not always a good guy. And what I mean by this is that I work alongside a business, the first line of defense, and I know people call this different things, but it's the first line of defense. We want to catch problems that are happening in the business process so that when an auditor comes along, the actual work we're doing is so closely aligned to what we said we were doing that we can test and validate these controls. We can make sure that we're actually complying with the law. We can prove we're complying with the law. But I'm not always a good guy because businesses change things. They make adaptations to process. They don't properly document it, and they know that they're at risk. And sometimes they're hiding known problems, and we can talk about that at another time. So I'm not always welcome when I come in and say, "Tell me a little bit about what you're doing." And they say, "Well, the future state of our process is that." No, no, no. What are you actually doing? Because see, I've already read the rules, and regulations. I've already read the applicable policy. I've already read the risks that that business unit has accepted. And now, when you show me the business process and the control, I have an obligation to point out where the implementation is different than the expectation. So that expectation is, what do we have in documentation? What are the auditors going to look at? What are the regulators going to look at? And so this is a very valuable thing, but it is challenging for the business because I might be an intermediary between the business itself and an independent audit group or an independent internal audit. I might be on the independent internal audit doing a control validation, doing a pre-audit. So we're preparing for an outside auditor to come in and gathering evidence. And very often I have to ask the tough questions like, can you prove what you just claimed? So, in the concept of the privacy policy, if you have a requirement to follow a Canadian privacy law, can we prove that we don't have customers in Canada? Do you see how this works? Because if you're an international company, it may be assumed you have customers in Canada. You may have customers in Canada that are business customers, and the consumer privacy law only applies to your consumers. So, can we evidence either that we have and we're following the applicable laws, or we do not have customers and therefore we've accepted the risk of privacy should we have customers in the future, but we don't actively follow we don't have to follow the law. We don't have to actively have controls because there are no transactions that are qualified transactions. In a case of a foundation, if a client comes to me, usually a high net worth individual, maybe it's a corporation that's been pretty successful and they want to lower their taxes by starting a foundation. Maybe it's a foundation or a charitable organization that's doing fundraising. Can we demonstrate that we raised the money from applicable individuals? So there are anti-money laundering laws to worry about. There's quite a few different privacy is an issue there as well. But again, what are the laws, rules, and regulations applicable to the activity? What are the organization's policies, which define the guidelines or the expectation in order to comply with those laws, rules, and regulations? Finally, what are the business processes and controls applicable to that? That's the absolute basics. And again, I have to be the bearer of bad news at times because if the company doesn't have the basics, I need to point that out. Sometimes I might open an issue. An issue is a definitive statement with a problem statement and then a root cause analysis, and sometimes it causes finger pointing, but essentially as a risk management professional, the goal is to normalize successful compliance with laws, rules, and regulations, even if the individuals performing the activity are not intimately aware of the details of those laws, rules, and regulations. I'm going to work with subject matter experts. I'm going to work with directors and executives. I'm going to work with um, the legal department. I might work with the accounting department. But altogether, I facilitate these diverse inputs in order to create written, easy to follow controls that are embedded inside written, easy to follow business processes. And then, of course, we wrap around that change management, document retention, uh, and everything that's necessary to evidence that the company is clean, that the company follows the rules, that the company is compliant with the expectations of regulators. Nothing gives me greater satisfaction than regulators showing up for an audit, and maybe there's a consent order, maybe there's a matter requiring attention, and those auditors go through every piece of detail, and even they're a little anal retentive at times, and they come back and say, "Thank you. Everything seems to be in order." And they lift some kind of rule or they lift some kind of consent order. That is the greatest satisfaction that I have as a risk professional. And I hope what I've given you here today helps you understand that there's a lot more in maintaining the relationship that most people don't know exist. And so the level of expertise that I'm able to bring to you as a private client or whether I'm engaged with your organization as an employee is that we know where the bodies are buried and we're fixing those problems so that the probability of success with an audit is as high as we can possibly get it. Again, if somebody finds something, if an auditor comes in and they find something, let it be minor, let it be something that we can fix. And we've already found all the big bugs. We've found all the big problems and we're working on them and we're solving them. And we understand that there will be big problems as you increase the complexity of the number of employees, as you increase the dollar transaction value, as you increase the just bureaucracy of laws, rules, and regulations. These things change all the time. And then ultimately, we normalize success in auditing. We normalize the successful implementation of our written documentation. And then we ultimately can prove our position, positive or negative, so that we get the marketplace value that we're looking for. I'm Justin Hitt with Inside Strategic Relations, and I hope this has been a helpful overview about what we do as risk management professionals, how it is of value to your business relationships, because every corporation who has laws they have to follow has a relationship, whether they like it or not, with a regulator. And we need to make sure we meet the expectations of regulators, that we are conform to the laws, rules, and regulations, and that we ultimately position ourselves. And sometimes this evidence is used to change those laws, but we position ourselves to have the most satisfactory outcomes when it comes to uh, audits, inquiries, congressional hearings, and all that and more. If you have questions about this part of the strategic relationship, you can go to www.insidestrategicrelations.com. Go to the contact page and ask your questions. I am working on a book called The Essentials of Risk Management, which is a layperson's guide to risk management, because smaller organizations are finding the need for chief risk officers more than ever before, especially small regional banks. And the healthcare industry, insurance industry, the fundraising industries are really seeing a lot of regulatory demand, both on a local, federal, and international field. And perhaps with this understanding, you'll be able to have more success in your business and a lot fewer setbacks. Again, I'm Justin Hitt with Inside Strategic Relations, and you can reach me at www.insidestrategicrelations.com. You can join our newsletter, ask your questions. I'm looking forward to hearing from you soon.